Welcome back to the channel, Crypto Trend Trader, with another morning market update. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, today we're going to run through a couple of mixed assets. We're going to focus on DXY, TNX, gold, silver. I'm going to do Polkadot and Ethereum, and we'll check up on our trades from last video, and then of course Bitcoin as well. So let's get started. We got the DXY chart up here right now. That is our daily chart, and we had spoken quite a bit about our channel that we've been basically descending in for quite some time now. And we had spoke specifically about we were paying attention to see if we got rejected or if it looked like we were going to break out of it. We broke out of it. We crossed the 8 and 21 to the upside. We are now above the 50 SMA and the 55 EMA. We made it all the way up to the 89, which is what we were expecting from last time. And I spoke specifically about how the 89 had rejected us here and the 89 had rejected us here. So I expect at least a temporary rejection of the 89, possibly a pullback down to the descending channel line, and then a powerful bounce up from there, or break back into the channel rejection and continuation. But seeing as to how we found strength around the midline, the center line of this downward sloping channel, I think it's more likely that we'll be able to continue on here to the upside. So what we're hoping for is essentially to break out the top of this 89 here and then get our first move up to the 200 exponential moving average, potentially 200 simple, 377, or the entire measure move all the way up to the 528 to retest our breakdown resistance line here in green, which was all the way up at about 95. So we're going to take that one step at a time. We are already getting a little bit tired here, as our Stochs are in the bullish control zone. So a lot of times we'll see like a move into the bullish control zone and then a slow sell off, kind of like a sideways action or retracement like we're expecting, a slight one here, and then continuation. Something like this. You basically get rejected off the 89, come back down, put in a higher low, and then, theoretically get continuation. But if we do get rejected the first time, we want to pay attention to if we get rejected the second time. But now, because we're building strength from the midpoint of the channel and we've already broken out, now this channel should act as support. So if we get rejected on one of these moving averages, we should come down, find support again, and that will be reassurance to the market, and then get continuation, showing that the dollar is strong in relation to these other currencies. And if you look at the euro also, obviously it's showing quite a bit of weakness. So next we have the 10-year treasury, and again, just like we spoke about, everybody was getting extremely bearish on this, but we crossed the 8 and 21 moving average to the upside. This is on the daily here once again. We confirmed crossed them basically to the upside back here at 54 cents. Shot up above it, found support, continued up, and then once they crossed here on October 1st. Once they crossed on October 1st, this has only been strengthening this entire time. And now we are above the 200 exponential. We're above the 200 simple. Both of them now have a positive slope to the upside. So there's no reason to think that we're not going to continue to get, strength in the 10-year treasury, implying higher rates basically. So basically we came up here and got rejected by that 377 once, came down, put in another higher low, did not cross the 821 daily to the downside, and now here we are retesting that previous high. So now we have lows that are continually getting higher and we're retesting the high. So it makes perfect sense to me that we maybe get rejected again, another lower high, and then break through it, or we could possibly break through it right away. But both this and the DXY, typically when those two start to strengthen and enter a uptrend, tend to correspond with sell-offs in traditional markets. And once again, just to kind of retouch on this, the treasury has been in a downward sloping, position here since back in 2019. That's January 2019. So basically since the end of 2018 to the beginning of 2021, we've been in a downtrend, and now we're entering into an uptrend. So there is a high likelihood that, we potentially have bottomed out and it's time to see this thing strengthen. So let's see what happens. But once again, that's a multi-year, basically a 3-year trend. So now we have gold. Gold is doing exactly what we spoke about. Again, we're in this descending channel, basically came down to the bottom 3 times here. 1, 2, 3. Tried to break out of the top. Obviously we put in our top point here, tried to break out once. Second time got rejected, found strength, broke out, but could not hold it as support. That looked like a throw over to me, basically a fake out, or a failed rally, failed breakout to hit the measure move here. And then you'll see we started forming this triangle with a low, higher low, and a third, substantial higher low. Got squeezed into this triangle. This rejection candle right here, looks like a shooting star, big wick on it, small body, basically one more push-up attempt to come out, take out the parabolic SAR, rejection once again. We crossed back here, the 8 and 21 to the downside again, at which point in time, we obviously broke out of this. This is exactly what was happening during the video. We were starting to break out, and I said expect to push back up, retest of this green trend line that we're breaking down from, and then rejection and continuation. I had spoke about potentially finding support on the 200 exponential, but here we hit the 200 exponential, and then we got a big push away from it, all the way down from like 17, basically you count where the 200 exponential, that was at 1800, and we got a push all the way up to 1950. So, over 10% rally. This time we hit the 200, barely moved away, and then here we are right back at it. That's typically what happens when it breaks. It loses that strength to push you away, gets rejection. Now we have gotten rejection, and we're already down here at 1800. I said, essentially target is 1700s. So, let's see how low we get in the 1700s. But, the measured move would basically take us back down to this bottom of this channel we've been paying attention to. And it's going to take us down to the 377 on the daily, and again, that's low 1700s. Basically 1720. So are we going to get there? I don't know. It's going to take time regardless. But, our first main target is going to be the heart line of this channel. We got quite a bit of support and rejections, off of it. Support. So the likelihood is that we would get a support down here at like 1780, and then see, do we come back up here and retest the top of the channel? Or, do we find weakness, get rejected by the 200 exponential and continue down? But now we're losing the slope on the 200 exponential. 200 simple still has a little bit of slope here, the darker blue. But, in time, just like we talked about, once those daily trend lines flip over, once the 200s lose their slope and we're below them, that typically symbolizes a long trending downturn. And again, I'm a gold and silver bull. Fundamentals are strong in this current situation, but the technicals look weak right now. Switching over to silver, did exactly what I said. When we broke out of our triangle right here, we were expecting a measure move up to at least $28.98, $29. We came up the first time, put in another top to the triangle, got rejected, came down, put in a higher low, continued the breakout here, got that massive pump. Everybody attributed it to like Reddit and Twitter and all that, and the exchanges. You can't even buy silver, can't get physical. Everybody's freaking out. Premiums were between like $6 and $10 an ounce. Just for like regular silver versus like, Eagles were closer to like $10 and $12 an ounce. Sites wouldn't even sell it, charging huge premiums. Everybody was talking about how this is it. The squeeze is in. What did I say? This is a big, big market. Over $1 trillion market. This is not some puny little bankrupt GameStop over here. I said basically smart people, institutions, are going to sell into this. They're going to smash this back down because you can fight a lot of things. You can fight hedge funds. You can fight all kinds of stuff. You can gather together. But this is probably one of the most manipulated markets in existence. And there's proof of that. And this is essentially, you're fighting massive banks right here. So exactly what I said happened. We got the exact measure move, a little push higher actually for like a double top. And now here we got rejected. We got a essentially bearish engulfing candle. We had a massive green candle followed by a massive, even bigger red candle. We're right back inside of the pattern that we've been paying attention to. And now here we've gotten rejected by the 8. Last time that happened, we came down to the 8. And again, we got a massive dump right here. Typically, silver tends to follow gold. It has not broken out of its little triangle yet, but I would expect it to happen. I would imagine it's just a matter of time. We're probably just going to get another one, of these big boy candles like this come in. We've got 8 hours left on the market. It is currently 9 a.m. on Thursday, but there's no reason that this thing can't come back up and retest the top. But I think it's more likely we end with something closer to this, where we come down. We're already at the 21. I think it's very likely that we're going to hit 25.50 today. come down here, test the bottom of the channel. Now the question is, are we going to find support on the parabolic SAR and decouple from gold? I mean, silver has been showing more strength than gold lately, but I think more likely than not, what's about to happen right here, we're about to break down here, and very soon make our way down to the 200 exponential and simple moving averages. I think we're going to be retesting that $23 range, to the high $22 range very, very soon. So we'll have to see how that plays out, but it is definitely just looking like a, big double top rejection right now to me. So let's check out our trades from the last session. Okay, so we had previously spoke about what we're expecting from Polkadot here. This thing has been crushing it lately. We've done quite well on it. The measure move we're expecting if we broke out of this ascending channel to the upside was close to $23. The measure move to the downside back to the 200 moving average was $12.65. We basically failed to break out multiple times right here. Came down, found consistent support on that 89 moving average right here, and then we started forming another flag or triangle pattern right here, and we tested the top, put in another higher low. So we spoke specifically about this trade in our last video. Basically the measure move breakout, taking a position off of the breakout of our top of the triangle right here. And the trade I had positioned here had a 4.57% stop loss with a 13.68% reward. So basically it was a 3-to-1 risk reward ratio. We never even came back near the stop loss at all. This was a great trade, absolutely perfect. You couldn't ask for better than that. Never even were in danger of getting stopped out. And not only did we immediately basically hit the target right away after that, but depending on if you're still in the trade, got out of the trade. I took profits here after the third rejection in a row, and these big wicks right there, I sold into this candle right when we were getting the close. Over 27% profit on this one. I did not use leverage on this, so that's just a smooth 27%. But to anybody else who took that trade, congratulations. This is not financial advice. I'm not your financial advisor. Please do your own research, trade responsibly. We got 2 red histograms in a row, getting ready to print. This is the 4-hour chart, by the way. I know I've been on the daily for everything else. We are in the bullish control zone, losing strength, looking like we're about to get a similar move like this. The cross back down, the multiple red histograms, typically result in a nice dump. Possibly come down, find support back at that $18 range, possibly come down, find support on one of these moving averages around like 17.20. But at this point in time, best thing to do, in my opinion, is lock in those gains. You can let your winner ride if you like, but obviously we never even have to worry about taking profits in this because we just got a strong, powerful candle consolidation. This did not look bearish at all. Again, another pump up here. Did not necessarily look bearish, but I didn't like these double rejection wicks on top, which made me put my stop loss at the bottom of the previous candle. So basically, if price action sold out below $20.67, it takes me out of my trade right there. Now, and I like these candles here too, because you don't have to give a lot back before the stop loss gets hit and it takes you out. And then, you can buy back off of a moving average if you like, or just wait and see how price action develops. Again, not financial advice. I'm telling you what I did. So, and then Ethereum, once again, we went over this one in the last video as well. This was great here. Basically, once we crossed that 8 and 21 back to the upside, we had kind of been dancing around it. We crossed it back over right here, and then we've been on top of it since. Even with that sell-off, we did flip the parabolic SAR over red. We did get the hard sell signal in the bullish control zone. We did get the flip of the slope line on the TJD Stoch slope, and then we did get 2 red parabolic SARs in a row. So basically, if you did the same thing, your stop loss got hit when you broke down from this. I am still in this trade for now. We'll see how it goes. But if we lose the 8 on a close, I will be out of that trade. Or if we close this essentially 4-hour looking bearish, I will probably be out of the trade as well. So again, not financial advice. I'm telling you what I did. Let's look at the exact trade setup that we showed from the last video. And once again, we spoke specifically about how this resistance here in orange had acted once, twice, 3 times, 4 times, 5 times, and then we took the trade, expecting a break of this resistance. Got a powerful candle up here, and we were looking at essentially the same triangle pattern that we had in DOT. This trade was a 16% to the upside, 4.37% stop loss to the downside. So basically a about 4-to-1 risk reward trade. And you'll see that that was also the measure move in blue of the triangle is what we were going by, corresponding perfectly with the Fibonacci extension targets from the top right here at 1469 to the bottom of the retracement, bottom of the triangle, bottom of the upward trending support line at 1200. So a 100% retracement was back to that same point right here, and then breakout of it. Typically, we like to see either a 1.5 or 1.68 get hit. We did hit the 1.68 perfectly, 618 rather, perfectly. And obviously that's where we topped out and could not get a candle close above it. Now, can we find support now on the top of this channel and then continue to the upside? 100%. But there's a very high likelihood, in my opinion, that if these markets start to sell off, this is just going to be a throwover, just like we saw in silver, where it pumps up out of the top, looks like a confirmed breakout to the upside, and then sells back off down into the channel, and then potentially breaks and goes to the downside, in which case, we have some serious targets to the downside of like $1,000 pretty much. So, again, we're not going to get bearish on that just yet, but we had these multiple descending channels. Every time we got the perfect measure move breakout, and then we broke out of the triangle. Again, perfect measure move breakout. This trade was a 16% without leverage. I used 5x on this one, so basically looking at about 75%. Not bad, obviously. 75% gains on a position is excellent. Not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. These are my trades. I like to show you guys what I'm planning on doing, ahead of time, so you can kind of get an idea how I set my risk reward, how I set my targets, my take profits, etc. These are not recommended for you. If you lose all your money, it's not on me. And then next we have our Bitcoin chart. So here we have Bitcoin basically on the 4-hour once again. We were forming this triangle right here. We got our breakout of the triangle. Did not make it up, unfortunately, to hit the measure move. But, all is not lost quite yet. Obviously the measure move of this triangle is massive. And, if we break out of this descending triangle, our target to the upside is huge. But what I did do is when we came back up here to the 786, I did enter a short position basically to see what happens here. It looks like I sold the absolute top on this chart right here, but I didn't. I sold like it on the shorter time frame. It wasn't quite the absolute top. It was like back in here somewhere. 30, I think it was 38.3 or something like that is where I sold because I waited for the second candle to come back up here. That's not actually where the position is at. It was somewhere around like here. But anyway, that came up here and tagged our 786, which was that previous high right here, perfectly. Once again, we set our Fibonacci from that target right here at 38,681 down to our 32,278. That was our Fibonacci retrace with our fib targets to the upside, as well as our actual Fibonacci from the previous move up here. That's the orange one right there. And then we have our fib extension targets if we can break out to the upside. And then we also have in white here from that previous all-time high down to our low back here. So it was like 42,000 to like 28,700. And you'll notice that when we came back to the bottom here, we came up to the 0.5. We came down below the 236. We came up to the 786. We came down to the 382. So you see we're putting in, if you count the wick for the bottom here, and then this is technically on a 4-hour, a lower high or lower low right here. But, we're counting it as essentially off of the wicks in this case. So you came down and basically didn't sell off as much. You didn't take out that Fibonacci. So it's still an internal retrace. So then when we pushed up, our wick hit the 786 perfect. So we have a wick at the 0, a wick at the 786. Then we come down, and then we have our, wick at the 0, wick at the 0.5. Then down here to a lower high, or higher low. And then up to the 786, perfect wick. And then back down here, did not get to the 236. So we found support at the 382, and then we came back up exactly to the 786. Now what I'm paying attention to, let's switch over to a little bit shorter of a time frame here. Let's go to the 1 hour so this is a little more clear. What I'm paying attention to is, essentially we have set in this orange parabolic trend line it has been acting as support. Every time we move away from it, we revert back to it, and then we move away, revert back to it, slowly start moving away. And now once we moved away from this orange line, we did the same thing back here. We moved away, moved away, moved away, rejection, sell off, and then, obviously moved way away, and then rejection, sell off, and then we came back to it. So what I'm expecting to happen here is, we've moved away, and now we formed this yellow parabolic trend line. We've come up here, every time we move further away from it, we came back to it, found support, and found this white line as support here. As soon as we broke down from that, breakdown, retest, confirmation of the failed attempt to get back inside of that little channel, and then we come down, retest our yellow trend line, and then now here we are again. We have broken down from it, tried to get back inside of it, got rejected, found some kind of like support here. We're still attempting to get back inside of it. So if we can get up here into this 37,859 range, in the next hour, and close a candle back in here and potentially start moving back up here, break through that 786 at 38,679, it'll look great, and we can get that burst to the upside and potentially get to, some of these Fibonacci extension targets. The 886 and the 1.236, the 886 in white and the 1.236 are our next target, and that's 40,258. It's very likely after that we would come up, retest the all-time high. I would say more likely break through it and get to 42,347. But, we obviously have moves up here, 1.5, 1.618, the measure move of the triangle. But, that's basically putting us up in like that 43,500 range. So paying attention here. Do we get back up in here, find support, and get continuation? Or is this just going to do the same thing once again, where it breaks down from it, retests and tries to get back in it, gets rejected, and then comes down and retests the next one? If it does, that's going to have us get rejected and come back down here, which is not necessarily a bad thing. We just come back down here, refuel, and then get a continuation move to the upside. But, I would expect at least down to the 618. Last time we found support at the 382 in white right here. So it's not unrealistic to think we would come up to the 786 and then back down to the 618 in like this 36,200 range. That would also be finding support on like our previous little, Elon Musk pump top. On the 4 hour, it's like at the top, and this is just wicks outside of it, which lines up perfectly, like a little more realistically. So you can see like it's top, top here if we're on a longer time frame. And then the top here broke down through it, found support, continuation. So what we want to see is, do we come down here again, find support, and get continuation? That's going to line up perfectly with our parabolic orange trend line as well. So again, I'm looking for like that 36,000 range, somewhere around there, find support, and then get continuation. Or, potentially does what silver did, where it breaks out the top and then comes back into like this larger triangle pattern. So that's what we're paying attention to. If we check out on the 1 hour, we did lose this red trend line. We do have the histogram red, and underneath the slope, we do have the sell-off coming out of the bullish control zone at the absolute top. If we switch over to the 4 hour, we're starting to show weakness. We obviously need to see what happens here, but we already have 2 red histograms in a row. We're potentially looking like we could bounce this blue, off the purple and get a little more continuation. But the knife already came down below both of them. We're in the bullish control zone, so it's not all over yet. But last time we lost the bullish control zone and got the hard sell, we got a massive dump candle afterwards, continuation, and then a pretty nice sell-off. Let's look at what that was at. So this was our dump candle. We came down 25% last time that happened on the 4 hour. The time before that, when we got the hard sell, was up here. And if we pay attention to, we got the hard sell up in this range right here. Just if you count this little move right here, that was over 25% pullback. So we got a 25% pullback out of this range, a 25% pullback out of that range. So is it unrealistic to think we would sell back off here once again and get another 25% pullback if we exit this bullish control zone and get the hard sell? I don't think it's unrealistic at all. That would put us down here at about that 27,500 range. Potentially be putting in a lower low. So we'll have to see. It is possible we still get continuation through here. I'm paying attention to what happens here though. On the 4 hour, we did technically close higher high on the 4 hour from that previous little high. So that is good. It shows some kind of promise at least. But once again, not getting overly bullish on this thing. I'm just waiting to see what the chart is actually telling us. But overall, Bitcoin is still in an uptrend. We are still in a bull market. We are still trending to the upside. And, a lot of the alts have been deviating, showing a little extra strength in there. But Bitcoin is still holding strong. And as long as it's holding strong, I think all these markets look promising. But at the same time, we're seeing at least some temporary retracement possibilities in the near future. So pay attention to what the charts are telling you. Thanks for tuning in. If you're new to the channel, make sure you like and subscribe. Feel free to share these videos anywhere you like. I do not have social media, so it definitely benefits me. Also, liking and commenting is a free way for you to contribute to the channel. Or if you'd like to contribute in crypto, feel free to send Bitcoin or Ethereum. I do love when people show support. It makes me come out here and, do this even more for you guys. But it is not necessary. I do appreciate any comments. Also, the chart itself, my Bitcoin chart is always available for free in the description down below, as well as all the different indicators I use. And if you're curious how to use those, feel free to ask specifics, but I have all my stock settings and all my indicators for free on TradingView. So you can go right in there, put them on your own chart, and enjoy them for free as well. So crypto trend trader is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. And just before we get out of here real quick, let's slap these moving averages up on here. And, once again, we are above 200 exponential. 200 exponential. We are above the 200 simple. We got the 8 and 21 cross to the upside back here. Save the cross right here. So until we break down and take out this parabolic SAR right here, until we start crossing the 8 and 21 on at least the 4 hour to the downside, there's no reason to get overly bearish in these markets. So, every time that happens, it symbolizes or signals that we're going to get a big dump coming in here. So, once again, we exit this bullish control zone, 821 cross, and then we get those massive dumps. So pay attention to those. Same thing right here, 821 cross, try to save it, massive dump. So as long as we're above the 8 and the 21, we don't have to worry about that. So as long as we're staying above 36,000, as far as I'm concerned, no reason to be worried in these markets. The best thing to do, for me at least though, is hold my spot position and take profits using short positions to essentially hedge when we start to show weakness in the market, so that I always keep the same amount of crypto, but I gain dollars as the price goes down. So I still have the same amount of Bitcoin, but I have more dollars in my account, and then I can use those dollars to either pay bills with, or buy more crypto with, or buy silver with, or gold, or whatever it is that you like. There you have it, crypto trend trader, and I'm out of here.